Okay guys, welcome back to the channel. Matt with Green Bar Trading here, and welcome back to another weekly watch list video. So we have a lot to get to. I'm going to jump right in, and I'm going to start where I start every weekly watch list: earnings for the week. A pretty big week of earnings. A lot of the S&P 500 has reports this week, so that's up here on the screen. And then going over to our sector performance on the week. So we saw for the week real estate finally get off the mat and made a move. Also, utilities, which has been one that has been really beaten down, has gotten off the mat as well. Had some really good weeks. And technology, something that we pointed out last week, technology started to move up the list. So technology we saw on Friday with a very nice day. And financials have also been outperforming as well. So this is where we sit on the month. Energy up 18%. Very nice. Financials up 10%. So that's our sectors here. So looking at the economic calendar for the week, this is really important. A huge week. We have the FOMC on Wednesday with Powell speaking at 2:30. Always moves markets a lot. So be aware of this, especially trading Monday or Tuesday. There should be a little bit of sitting on their hands before we get that FOMC in the rearview mirror. And then on Friday, it doesn't get any easier. We have the NFPs, which is our payrolls. It's something that the Fed will look at. And, this goes into determining a lot of what they do. What they've been saying and what they want to see is for unemployment to actually go up. So if we get strong jobs numbers, it normally hasn't been great news for the overall market. So we'll have to just see. We are in a different type of market at the moment, and you have to realize market structure matters a lot. We were in a very oversold, negative sentiment market, and usually you'll see some nice bounces, and you'll even get bad news during these rallies. They don't even matter. So we'll see what happens. We'll see how strong this rally really is. But October was a really nice, good month for the market. So this is our economic calendar, just jam-packed this week. So everything we go over, in our technicals, whether it's, stocks that we're looking at, you have to realize when you're in some days like this, they can really destroy the technical analysis. So just be aware of that. Looking at the Treasury bond yields, the 10-year, this is something that's really important. The 10-year is now yielding less than the 3-month. That is almost always a sign of a recession coming in the future. This does not happen often. When it does happen, it usually has been a precursor for a recession. So just keep this on watch. 4.01, 3-month is 4.08. So that is definitely a very inverted yield curve. And we'll see. We'll see what happens. Sometimes this can happen 6 months, a year before we see a recession actually show up. So that's our bond yields. And then something that I showed you guys last week in our weekly watch list video was this right here. This is the bull bear indicator. It really does a great job at looking at sentiment in the overall market. So last week we came in and we had 25% bulls and then 31% last week. This week we saw 36.9. This is still a very low number. And you can see here that we were hitting really I mean, levels that we do not see often, and it's usually a good time to buy for a bounce. When everyone is negative, that's usually a great time for a nice rally. So we're still seeing a pretty low number right here, 36. That's okay. So we'll see what happens with that. And let's get right into our compass, right? So we always start this with the SPY, what we see on the daily chart, and where we've come from, where we're going, indicators, 200 moving average, 50 moving average, and the 20 EMA, which has been very, very important off of these bounces that we've seen. That 20 EMA has been sort of resistance. So we were saying last week during this same video, let's see if we can hold up this 20 EMA. Because last Friday, we broke out through it. So we ended up holding up, and we actually broke the 50, which is great. That's a good sign, good start. We saw rejection here on Tuesday, Wednesday, rejection on Thursday, and finally barreled through there on Friday. So that was good. Closed over the 50 moving average. Haven't done that since back here at the beginning of September. So not a bad sign. You can see here these boxes that I have. This is where and how long it's been consolidating before that breakout. So this is very similar here to the June lows that we saw. This is very similar in that we broke out, retested the box, right? Broke out, retested the box, and then started on a more of a bigger pull away. Now, when you do this, you get these pull away days, and then it consolidates, and then maybe some more. Now, I'm not saying that has to happen, but if we were going to target anything, I would say that 400 on the SPY, which is about 4,000 on the SPX, this could be the next area where we consolidate. If we continue up, now you have to realize something. We are headed into a very important week with what Powell says. So that can move markets. If they say anything out of the ordinary, something that the market is not expecting, it's gonna really weigh on the market. But I think with market structure and the way that things are looking, I don't even think some negative news might stop this rally. I think we have some more continuation. So we'll see what happens. Now, predicting market and direction is almost impossible. You have to realize you got to watch and see what's in front of you. But this is what I like to look at. These indicators, past patterns, things like this. I really spend a lot of time researching and looking at and seeing if we can figure out a possible next move. Because when you have direction in your favor, it's so much easier to trade. I don't know how many of you guys out there, had a decent week once that direction was a lot more evident. Like you can see here on the weekly chart, well, we held up that 200 moving average on the SPY and we started to pull away. So direction was very nice here off of this bounce. So that's the SPY, that's the daily and the weekly. I don't like to just look at the daily. I also like to pull up the weekly, see what these candles look like. So let's go over to the NASDAQ market, the tech market, the Qs, QQQ. What did we see here? Well, basically, we're still under the 50 moving average. All of the other major indexes have closed over the 50. The Qs have not yet done so. So as we consolidate here, let's see. I mean, the Qs have a lot more room to run if they catch a bid. It does seem like this is a bottoming out process. In the making, let's just see. I mean, you have an inverse kind of head and shoulders here. Maybe we can get that move up to the 300 area if we break this 50 moving average. Like I said, a lot is going to be dependent on the macro, the outside events that we're going to see this week. So let's just keep that on watch. That's the Qs. Let's go over to the Dow Jones Industrial, which is the DIA ETF. Now, this is something that I took notice to. This move up that we've just seen is very much identical to the move from the June lows into that summer rally. 15%, these white lines right here, this represents a 15% move off the bottom. A 15% move off of the bottom would bring you right to this down trend line. And you can see here, when it's gotten over the 200 moving average, it's hung up here for a couple of days. You can see here, back there, and then pulled on back. The RSI is overbought at the moment. When it was overbought here, it pulled on back. So just keep an eye on this. The Dow Jones right now is approaching that overbought territory. So that's the DIA. And now let's go over to the Russell. Our small caps also closed nicely over the 50 moving average. And now what you see here is this circle. This is the downtrend line, right? This is also to previous, what was support turns resistance. So this could be, and the 200 moving average on the daily chart. This could be your next area here where price gravitates towards. So that's the IWM. This did not break the June lows. This is something that's held up a lot better this year in particular. I mean, it still had a bad year, obviously, but it's starting to move on up. So that's the IWM. Very good. Moving on. Let's take a look before we get into some of the stocks that I have on watch. Let's take a look at the VIX. The VIX on the year topped out right here at 34s and pulled on back. This pulling on back, the market going up. Now this is just a complete, whatever this does, it's just a direct inverse correlation to what the market's going to do. So we saw here, it broke down under all three major moving averages. And now we'll see if we can get back to those lows for the year. So around 20. If we do that, that should be an area where we all watch and see if we don't then go back on up, which would mean the market would go on down. So that's the VIX. Looking at the dollar, the strength of the dollar, I mean, unless you're living under a rock, you have heard or seen the strength of the dollar and how it's negatively affecting companies' earnings. So if you're looking at the chart on the daily, right here, we broke down. So we started to roll over. We broke down under the 50. And now let's see if it starts to make that move on back. You can have a trend line basically here as well. So we'll see. It's kind of trading in this range. It's probably going to stay there for a while unless the Fed comes out and starts to do a little bit of a softening, maybe a little dovish, and this will come back down, which would be good for a lot of companies. And, inflation in general is running obviously way too high. Looking at the bond yields, this is the 10-year Treasury note. We've seen support here at the 20 EMA. The same thing happened on Friday. The bonds actually sold off, the yields went up, and the stock market still went up. So that was a good sign. Usually when the yields go up, the equity market will come on down. That didn't happen on Friday. I liked that a lot. So even if the bonds continue up, because they are support at this 20, maybe the market, being that it's in a different market structure at the moment, will push that aside and let the rally continue. but we'll just have to wait and see. So now I'm going to show you a couple of stocks that I have on watch. These are charts. These are things that I'm noticing for potential moves, but you have to realize trading on a week like this is just very risky because you just don't know. With the FOMC and the jobs on Friday, it could be a week to actually just, I don't know, take less risk. Just really be careful when you're trading a week like this because it is tough to figure out which way the market is going to go. It's tough every day, but especially a week like this. All right, so with that said, let's get into it. Airbnb, my first stock on watch. We have earnings this week. So what I'm looking for, you can see here, you're kind of in this bit of this triangle pattern that is off its lows. Can we get a breakout to the upside? Because if we've looked in the past here and going back, let's look at this on the year. Hang on one second. Okay, if you look here on the earnings, the third quarter of last year, their earnings were very good. It gapped up, had a huge, huge day. Now, this is going to be the same thing. Q3 earnings, if they're strong, maybe you can get that breakout to the upside, but you do have to realize you have this downtrend line coming in, you have the 200 moving average coming in, so just keep that in mind. And also, a lot of these stocks that we've seen this year with really high valuations and high PEs, after they do have earnings, they've actually been selling off a lot. So just keep that in mind. These stocks are way off their highs, but this is just a pattern that the market is looking like it might want to break out to the upside. But we're going to have to wait for their earnings report to see how that goes. Now, something else is Toll Brothers, TOL, a chart that I'm looking at. On the daily, you can see here, this really did not break down below the June lows. And it looks to me like this has been so beaten down. The price to earnings is so attractive at the moment. And it's very obvious of why these stocks and the home builders have had a tough time because the rates have been raised by the Fed. It's making mortgages a lot more expensive for people. So you would expect that weakness, and it's been kind of just chopping around all year long. But we've held up support. We have a trend line here. If this breaks, it's got to break though. You have to wait, make sure that this breaks before you get into a trade. Maybe you could get on a retest, but we're over the 50. The last time we were over the 50 did not last very long. So wait for this trend line to break. If it does, then maybe you can have room up to that 200 moving average right there. So that's Toll Brothers. The next one that I'm watching for this week is Disney. Looking at it on the daily chart. So Disney had a double bottom right here and had a nice rally with the overall market. It has earnings coming up. Their earnings can be pretty decent moves. So right here, you're at the 50 moving average. You do have a downtrend line. This stock has been beaten up, but maybe we have some room up to this 200 moving average or this trend line. It's definitely starting to pull away from this double bottom, which I really like that type of setup. The next one, Home Depot. You can see here, obvious support all year, broke on up, and now you're coming into this downtrend line and the 200 moving average, which was resistance back here during that summer rally. So if you get up here, I would be looking to take puts to get this back on down. We'll see though, you got to see how it reacts around this area. But this is a downtrend line for the year. 200 moving average sloping down. A lot of times you'll run into it and then pull on back. So just keep this one on watch. That's Home Depot. The next one up, AMD, with earnings this week as well. It looks like it's starting to bottom out, a nice base forming. If it could get over the 20 EMA, you have room up into the 50 moving average, which is around 72 at the moment. But let's see what the earnings say. This is just some charts to show you guys. It's very tough to trade things with earnings. And like I said, with a lot of macroeconomic data events. So that's AMD. The next one, the last one, is Amazon that we're looking at. So Amazon, I have this play here to gap fill where the earnings announcement came out at 110. This dropped to 97.66 before catching a massive bid. You can see here on the volume, just got eaten up by investors that thought maybe it was way too oversold. So looking at this one, if we take a look on the weekly chart, it's still held up. So this was support. 102 was support all year. It closed over that on the weekly. So even though it went through it, it still closed back above it. So, you know, if we get any sort of strength, this can definitely go and retest and fill this gap. But it can also turn right around on Monday. So you just have to wait and see which way this is, because it is it's still at that resistance area, but it did have a very nice amount of volume coming in. So that's it. Hit the thumbs up for the video, and I'll see you guys back on the next one. Take care.